Good morning. It's the 29th of November. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. All right.
Bit late, yeah, good. Bit later today. We've been gassing away, but all good. Nice
Yeah,
bounce
excellent.
back in the markets.
Yeah, not for me, mate. You know what I was? I was short over the weekend, thinking,
Oh yeah,
happy days, go on, my son. Um, but yeah, big bounce back overnight, which I moved my stop to entry. Obviously, got stopped out, but I'm back on it again. I sort of like think that it's stalled. It feels like um, we've had this like technical bounce or optimistic bounce.
yep.
I think there's a bit more risk to this whole story than there is not risk, whatever that word is.
Yeah, I mean it's rare that you see big sell-offs like that, and then there's nothing more after that, and it's just a total recovery straight away. I mean, it has happened, obviously, in the past, but yeah, I'm not convinced myself. So obviously, the markets are very concerned, it would seem, about this Omicron variant, which I think we've got 3 cases in the UK now, from what I read in the press over the weekend. That may be more.
Yeah, there's more
Um,
in some in Scotland. I think there's 5 cases highlighting Scotland this morning.
oh wow, there's a
So
few in Chelmsford, I saw,
yeah, well, they said Chelmsford, yeah,
or
but that was
Brentwood.
a bit too close to me, so I've moved it down to Brentwood.
Yeah, fair enough.
So
Chucked it on
yeah,
the train.
but yeah, I think sort of like that. That's the reason for the bounce back. Obviously, is because there's talk of it being a lot milder. Although it's more contagious, it's a lot milder, aching joints and symptoms like that. But there obviously is more spikes in the protein or proteins in the spikes, whatever you have to
So
say.
it's more transmissible, does that mean?
Yeah, more transmissible is fine if the symptoms are mild. You know,
Yeah, well, it says here
it's
from the report that the it could be less dangerous than the Delta mutation, so
yeah,
that's not as bad at all, is it? We've all dealt with that, and there was not much of a concern.
yeah, exactly. So, but then is it a case of we're going to get a little story saying, oh, this person who's picked it up, the symptoms are a lot worse, and then the sort of like markets sort of like take that as a red flag and get smashed on the back of it. I don't know. It's something that's going to play out over time, and we'll see how that goes.
Yeah, so obviously the thin volumes as well with the markets over the end of last week with Thanksgiving probably exaggerated the sell-off, quite
Yeah,
possibly. Um, Obviously, we saw all the stocks that did well from working at home start to rally. You know, the Zooms, the Pelotons, the vaccine companies, they all did really well. But then it was the same old story for the ones that got smashed. So travel stocks, airlines, cruise liners, hotels, etc. So yeah, I mean, it's just shows you how fragile things are, I think, at the moment with regards to any sort of news like this, and with
yeah.
regards to different mutations and strains. Is that just not going to be something we're going to have to deal with constantly going forward, because it is going to mutate, isn't it? There's so many obviously opportunities for it to do that.
Yeah, and I think it's just taking a look at maybe the bigger picture and how the world has changed. I mean, still got these like wild valuations that we're looking at, and what the indices have done over the last 18 months. Well, maybe more now, maybe 20 months. From the sort of like bounce we've had, we're still at this sort of exponential rate of increase. From a technical point of view, we can look at it and we're seeing a little bit of topping out, and we've
Yep.
got to sort of take that seriously, because as we said I think we said on Thursday or Friday that even I don't know, a sort of like 5% retracement is a lot. It's a lot of points in an index, but it's not really a big. It's not a reversal or anything. It's just a small retracement, and anything more than that as well, we're sort of, I don't know. We could still shrug it off, and the market could have a wild move to the downside, or it feel wild. But from a percentage perspective, it's not that big.
No, as we've talked about a lot, these 38.2% fib levels, which are kind of natural correction points, and we still need to see that at some point. There needs to be healthy pullbacks in the market to create value for people to invest, especially as inflation is moving higher. There will be more demand to invest in things like the stock market, because that's you've got to protect your money against inflation. By sitting still, if you're in the US now, you're losing 7% a year on cash.
Yeah, Yeah, exactly. Well, probably more if we really had the real inflation figure, if
Yeah,
they dared to release that. But you know, we all know from each perspective what inflation is, because we look at what we're spending. We're not spending on anything different, but the cost of living is going up. And you know, you might strip out energy, you might strip out food, but that still is included in our sort of like what we're spending. So raising interest rates is not the answer.
no, probably not.
But it's still, it might be something that they do, but I think it's a huge mistake. They've got to find other tools, other ways of dealing with what's going on in from the inflation picture.
Yeah, well, they continue to peddle the line that it's temporary. We had the ECB President Christine Lagarde over the weekend say that so far the rise in inflation is tied to temporary phenomenons, and that is a view echoed by what we've seen from the US as well, stating that inflationary was or the inflationary pressures were temporary. Not sure, but we'll wait and see. So I
So
think
when
we've
they say that, Joe, one thing I
yeah,
think really winds me up about this is they say inflation is temporary. Now, are they saying that year on year inflation is temporary?
well, because it is
Because
if you go back over the history of
yeah,
forever.
exactly. I mean, it's always temporary. You know, you'll have a flat year where prices don't move, and is that sort of, has it solved the fact that inflation has gone up by 20% over the last 5 years? No, probably not. So it's, yeah, it may sound temporary, but you sort of have to have that wage inflation pick up at the same rate, you know, to sort of like to make it, or even inflation sort of like go down. You know, it's sort of it's got to be you know, sort of like a steady sort of like, you know, process across the board.
Yeah, agreed.
Anyway, let's get onto some technicals
I think
without
we
sort
should.
of get off
We've
our
talked enough. We've lost a load of
soapbox.
viewers. Okay, where do you want to start, Steve?
I'll start with indices, as it's been quite fun, as we said. Obviously, with the poor end of the last week, we had this potential upward trending support line. It was only a potential because we had 2 points on it. We've got 3 points on this larger trend line, which is coming in around about the swing lows on the FTSE, back from, get my glass out of the way, July. We are obviously, we can go back to May, we can go back to September, which is closer. For me, this is really a really important level, 68.10. Now, we had the sell-off Friday, setting up what, after the bearish engulfing candle, setting up, and the doji before that, setting out really a nice point to attack this downside level to see what sort of support we've got in place. And again, we talked about the Fibonacci. I think what I'll do, Joe, I'll stick to weekly charts. I might introduce a few short-term charts on more relevant things. But 38.2% fib is all the way down here, 6,400. So we're still a mile away. There's still plenty of potential for further downside. But are we going to get this support come back in again? We'll see. We've basically had a retest of this trend line that we drew in on Friday, and it's trading around there now, 7,108.5 at the moment on FTSE.
Just on that one, I know you was going to talk about weekly charts, but I just had a look at the daily, and I thought it was quite interesting from like a Marabuzu perspective. Obviously, we posted one of those on Friday.
Yeah.
Obviously, you've got fair few drawings on there, but the 50% point of that candle is pretty much the high of the day.
Right. Yeah. So 71.50 that comes in. See there. Yeah. And we've got up to that. So yeah, from a Marabuzo perspective, that's the area you would be looking to sell, that Marabuzo candle. Yeah, good spot on that, Joe. So yeah, we've sort of hit there, and it felt a little bit sort of spicy at sort of the 8 o'clock open. We had the DAX did feel a little bit more under pressure, and that sort of sold off on the 8 o'clock open, then retested the levels. We can see it here again, probably around about the 50% retracement. Yeah, probably got there as well. There we go, 15,475. So let's call that the pivot level today, I think, for the FTSE, 71.50 for the DAX, 15,475, and that for me feels like, you know, I've got back short of it. Probably a good place to have the stop is around there, hoping for further downside price action, obviously. Yeah, so let me jump back to what we see as the potential bigger picture move is a double top formation. I know they're not at the same level. There's about a 300 point difference in the highs here, but it's still the same type of price action. You make a high, swing low, new swing low, make a second high around about the same level. Obviously, we've extended further, but the rejection has been pretty ominous. That gives us a level around about 14,810. So for me, a break of there could open up a potential measured move down towards 13,360, and still not a 38.2% fib. Retracement still further to go. So that's the sort of like the setup I have in mind, just based around sort of also what's going on in the global picture from a fundamental, sentimental type of standpoint. On the Dow, we've had a doji, then a confirmation of this evening doji star with further sell-off on last week. So even on the longer term timeframes, we're getting some decent bearish topping out formations there. 35,630 for me was quite a key level, and we maybe below that as well, 35,500, and we broke below there. So I think for me, again, that'll be quite pivotal. Let's get a little bit, again, another Marabuzo candle. 50% comes in at 35,265. Didn't quite get there, stalled in front of it. Maybe still potential for that move, but under a little bit of pressure at the moment. The US seems to be being pulled by the DAX. I've been watching the price action of both this morning, and DAX seems to be leading the way on this and dragging the US because there's not as many traders trading it at the moment. Nasdaq, similar type of formation. We had this impulsive move higher. We're seeing a correction now. So if you think about a measured move target, let's get why isn't it showing me there we go. Potential move ABC correction would take us down to around about 15,439, so about 700 points lower. Other sort of fibs we can sort of place in there. 161.8 comes in at 15,693. So definitely sort of like numbers to look at. We've had a decent sell-off, and we are in a correction. It's not a reversal yet, but really, I think if we take out this swing low at 15,900 on the 10th of November, then there is potential for an aggressive move lower. Again, we sort of like look at these previous swing highs. They're coming in around about the 161.8. So 15,700 could be a nice little target there. S&Ps, yeah, similar sort of thing. Double top type formation, retesting the neckline maybe on here. And if we do go to look at the Marabuzo 50%, we hit it on the button, 4,647. So that was the high so far today, and we've retraced from there. Aussie 200, they've had a news of the new variant hitting their shores. 2 taxi drivers picking up 2 people from the airport to take them to a place of what is it called? Not sanctuary. It's like somewhere where you get locked up.
Prison?
Well, it feels like that. They've taken them to the hotel anyway, the taxi drivers, and 2 of them have been exposed to the new variant. So this is where it all sort of like seems to fall down.
It's like a nice head and shoulders there.
Yeah, ideally you'd see a really nice rally into this. I mean, you're seeing a reaction into this head and shoulders formation breaking down.
One. I'm going by the actually further over to the left.
Yeah. So we've had a bit of an extended right shoulder, but yeah, looking on, that's
the Aussie currency's been getting a bit of a smash as well.
Yeah, that's so probably a bit more obvious on the let's take it from this swing low. Yeah, a little bit of way to go to break the neckline. Probably if we break 7,100, that would definitely be confirmation of the neckline being broken.
Well, it's the lowest close, isn't it? It's closed below that red line that you've
Yeah,
got on there.
yeah, and
Which,
obviously
and
going,
obviously various ways. I mean, you ideally go by the low of the candle that we've got there that sort of hangs below it all. But yeah, maybe on a closing basis, you could argue that it did it last week.
yeah, yeah, you could do. Yeah, it's just taking out the lows and forgetting about the tails. Obviously, this level here, pre-COVID, pre-lockdown, going back to the 17th, the week of the 17th of February 2020, the high then was 7,202. We've been hanging above it, so a close below there would definitely get some alarm bells ringing, and maybe some reallocation of investment. Again, similar sort of thing in China 50. I've been talking about 14,500 for, well, it feels like years, but it's only since probably July, August time. But yeah, for me, that's a really key area. That's under pressure as well, China. I'm sure if we start to get some cases out there, and I mean, you're going to get these cases all over the world already. And obviously, we hosted the South African for the rugby only a week or so ago, 10 days ago.
How'd that
So,
end up?
huh?
How did that end up?
Oh, I think they got hammered, didn't they?
Yeah.
They hammered us and left us a little present. Thanks very much for that. So 14,500 is the China 50. For me, that is the sort of like number which we go below there, and we'll have a global sell-off in indices. You heard it here first, but way back
China
in
would lead the
July.
way, do you?
Yeah, that's what I think, and I'm really annoyed because I did read a big story about this, and it was around July time, and I sort of can't find the story now, but it's just how historically this has been something that we've really sort of like China's led the way on a number of occasions. I'll try and dig it out, try and dig the story out. Yeah, so moving on from there, let's try and get through this. It's going to be a marathon of a talking bull. This downward trending resistance was quite key. We broke above it. We retested, looked quite positive, and then broken back down. Again, we've got 23,695 that we're trading close to on the Hang Seng. As get below there, and we are opening up the downside. So yeah, Nikkei again, nice reversal. We can probably draw some sort of double top in here potential. The neckline down at 27,133 here. So a break and a close below there on a weekly basis could open up the downside. Look at commodities. Obviously, oil had a huge sell-off on Friday and has opened up with a bit of a gap. We can see the hourly chart closed up around here, opened up with a gap. Again, started to stall, but there is potential for this to all blow over, and we'll be all sailing off merrily under the power of oil into the sunset. But it needs to get about above $72 in the next few hours to sort of give that some chance, I think. On the oil side of things, again, we've talked about this as being the sort of go-to safe haven place. But if we do get an indices sell-off globally, then some long oil positions could be sort of like sold out of to offset the impact on the margin calls that we'll get on the indices front. So yeah, that's expecting sort of like quite nice volatility in this gold. For me, 1833, 34, look at it from a daily chart, is key. A break back above there and extending higher. But on the downside, we've broken back below 1800. We're trading around there now. Found some sort of base at 1780. Break of 1780 should open up and move to 1760, and below that 1720 to 1725. The main support coming in at 1677. I haven't completely written off another revisit to here on gold, although over the longer term, I still remain pretty bullish towards that because we are in this sort of bullish flag formation, which it feels like we did break above. but we didn't manage to take out this swing high from the 31st of May week at 1917 that comes in at, or 1915. It really needs to close above there for me to get back on the bull tack completely. But yeah, this could be a really nice long-term view on gold. Cryptocurrencies, I'll quickly go over cryptocurrencies because they had a huge sell-off as well. And again, as like the indices, they've bounced back really aggressively this morning, back to levels that they were trading on Thursday last week. But yeah, they've stalled around about Bitcoin stalled around about 58,300, and it's retracing from there ever so slightly. Ethereum didn't quite get up to the downward channel, so that stalled as well, but sort of like quite positive price action over Saturday, Sunday, and today so far. So the weekend seems to have come to the rescue of the cryptocurrencies. Ripple got down to 88. It stalled in front of the 86 level, which is the key support there. Cardano bottomed out at 142 and has formed a bullish hammer on that at the moment. So again, they're all sort of like got their fingers crossed, eyes shut, hoping for this indice rally to continue into the week. Yeah, so over to you, Joe, on that.
Yeah, nice.
I think
one.
I've covered
Thanks,
everything.
Steve. Yeah, I think so. Okay, let's get into FX then. So, dollar did have a bit of a sell-off on Friday as a result of the sell-off in other risk assets. Bit odd, really, because normally you'd think dollar would be a safe haven. Maybe it was a case of liquidating some of those positions in order to cover positions elsewhere potentially. But overall, it still remains in a bullish uptrend. It was trading in a channel which it broke out of, so now we're back within that. Potential for some consolidation, I would say here, maybe even a drop down towards 94.74, which is the previous level of resistance, which should now act as support, and it's also going to line up quite nicely with the uptrend channel. So I wouldn't be surprised if we do see some repositioning on this, given that we've seen that large red candle form on Friday. A bit of a bounce today, but not really holding on to those gains particularly, or not, reversing all of what we saw on Friday. So overall, I think there is, a bit of scope for a correction there. Funnily enough, we did see more money moving into things like Japanese yen and Swiss franc, which are also considered sort of safe haven currencies, and even the euro to an extent. Although if we do look at euro US dollar, that still looks pretty ugly. Still one of the most persistent downtrends around in FX at the minute. Big move to the upside on Friday as a result of that dollar weakness and a bit of euro strength, but ultimately I think this is going to be short-lived, and it will be quite really just a case of selling into strength with this one while the downtrend persists. So no sort of bigger signs of a bottom forming just yet. If we take a look at cable, that's not doing a whole lot really. It's trading at the lower end of this sort of bearish channel. It broke through some key support here at 133.53 and now sort of testing the underside of that. It posted a bit of a doji looking candle on Friday. Could even say it was a bullish outside day, but certainly not overly strong and not anything to get too interested about. From a speculative perspective, there could be some opportunity in the very short term, but I think it would just be a case of trading it for a bounce really, rather than anything longer term. If we take a look at dollar yen, was liking the look of this because I thought it traded and broken out from a flag pattern. Doesn't appear to be the case now. Huge reversal that we saw on Friday, coupled, with the weakness in the dollar and this sort of buying of yen. So really distorted the picture for that on me. I don't really know where to go with that for now. So probably just going to leave that alone if I'm totally honest. Maybe what will happen is we'll form some sort of top pattern. So this will be a left shoulder, this may be a head. Maybe we'll see a bounce up to kind of 114.50, but then maybe some rounded sort of price action. So not really too sure what to do with that. And when that's the case, it's probably best just to leave it alone. If we look at euro sterling, that's bounced from the lower end of this bearish channel. Some supports down here, big push to the upside on Friday, a little bit of weakness today. Again, any move to the upside, I think, is going to be quite short term. in duration. That's not to say there won't be opportunities. I think you could play it speculatively from the long side, but overall, I'd probably be looking to sell into strength up to sort of 85.50 kind of level. That's really it, I think, for me. What I'll finish on actually is the Aussie, because despite the the weakness that we saw in the US dollar on Friday, it wasn't matched for what we saw with the Aussie. That really took a bit of a hammering. So a big move to the downside, down to this key support of 71.05, which is its previous swing low from the 20th of August. Bit of a bounce today, but that is a key level to watch. I think if that gets taken out, then we are looking for a continuation lower. I've got a head and shoulders top pattern that's played out. I think we've already hit the measured move of that. So yeah, not looking great for Aussie, and that may spell, more weakness for the index as well, which we touched upon, which look to be potentially forming a head and shoulders as well. So yeah, a little bit of interest there. That's it. So gun to the head trade, Steve.
Yeah, did okay, I think, didn't I?
Based on the new variant coming from South Africa, you went for a short in the SA40, and you hit target on that 3R.
Oh, brilliant! Hit target.
Yeah,
Oh, wow.
I know the index on that we follow on TradingView shut at like 2 o'clock or something, didn't it?
Yeah.
But I followed it on the IG markets, which traded to 8.
Ah,
And come
nice
8
one.
o'clock, you hit target. So nicely
Lovely.
done. I got stopped out on Nasdaq, so bit of defensive characteristics from the Nasdaq actually, given that everybody wants to own tech, and they tend to be sort of still quite well supported, even in the sell-off that we saw. So didn't work out for me on that front, unfortunately. But Steve saved the day, putting us 2R ahead on a collective basis. So
Nice
well
one.
done. So Steve, what do you fancy today?
Oh dear. Now I'm going to get carried away, thinking I've got some sort of like ammo to have a real go at this. Um, I think I've got to go indices, and it is a tough one. It's sort of like waiting to see what the US think about this this mild variant that we've got going out. I think the word mild might become sort of like trending later. I'd love to sort of like sell a break of something, but obviously we can't. So we've just got to dive straight in. I'll tell you what I'm going to do. I'm going to go with the China 50, because for me this is the one that can really really have a go, and we can get a nice little stop in here as well. Let's see what we've got selling here at 15,470, because I have a gun to my head. How about this one? Is that too much to look for? No, that's not. That's a 4-to-1 risk reward on here. So I'm going to make this chart a bit bigger. Going to have the stop up here. Maybe could have it a bit higher, but I'm going to try and play this with a bit of an aggressive twist to it. 4-to-1 risk reward, selling it here. Stop at 15,505, targeting 15,330. Obviously, the spreads are a bit wide on there, so I don't know how straightforward that would be to get into that. But that's it.
Nice one. I'm going to take a look at ASX because I like what I've seen on the daily chart. This is my own interpretation of it, following the conversation we just had about it. So head and shoulders top potentially on the daily. Big, obviously impulsive move to the downside. Rallied into the 50% fib level. Close enough to it this morning or overnight. Looking for a breakdown to really get things going on the downside. Ultimate target down here at 6551, but from an intraday perspective, I'm going to sell it now at 7223. Stop loss at 7290, so around about 67 ticks, and a target to move down to a nice round number of 7,000. So that would require quite a big swing on the day. But you never know. I mean, this word mild that's being bandied around is probably not going to do me any favors, but let's just see how it goes.
And so from a trade of the week perspective, Joe, what would you sort of look at in the markets and really sort of highlight as your real, not fancy for trade of the week, but one market where you think we could really see some decent legwork?
Well, I mean, there's a couple of factors to take into account here. Obviously, we've got this new variant, which by the looks of things, there was a bit of panic on Friday, but that seems to have been calmed a little bit, which is good. We've also got the start of a new month, so we're going to have some potential volatility for month-end trading. December is typically a good month for markets, but then at the same time, we haven't really had any sort of prolonged period of volatility in any kind of asset for a while. So I don't really know. I mean, given the way that people have reacted to markets in the last 18 months, 2 years, they just looked for any opportunity to buy a dip. So you probably want to look at something that's been beaten up, and you'd probably buy it if I'm honest. Expecting more of the same. I don't. I think the speculative trade is still on the short side. The safer bet is probably on the long side with risk assets, if I'm honest. So
Yeah,
with that in mind, something like Aussie US dollar could be quite an interesting play, just because it is trading at a significant level of support there.
yeah,
It has had a really big move to the downside.
yeah. I
So
mean, and
any kind
there's a
of
clear stop there. You can see where your stop should be there
yeah,
as well. So from a risk reward perspective, it's pretty good, and it'll work on the basis of whether we get this this sort of like reversal from Friday's sentiment, I think.
yeah. So
Um,
I mean, just clean up this chart a little bit. Even from a range perspective, I guess you've got a bit of a range to play with there as well. Yeah,
yeah,
I mean,
like it.
as you say, a clear level of support is on offer there. If that breaks, then you pretty much know where you stand. It's going lower. But if there is not too much concern about this new variant, then that could be a good candidate for a buy and a quick return on the upside, maybe.
Yeah, nice
What
potential
about
double
you?
bottom. Yeah, I just sort of like thinking I'm going to do a trade of the week call in it soon. I was thinking what your view was on that. I think it's much of the same. It doesn't feel like it's an ideal entry point today, but there's potential for the rest of the week to build a little bit of momentum. Whether we correct from last week's price action, or we get some other sort of like price news bombs, I think we can call them. It's not a nice
Yeah,
word to use, but that's what happens. You get these like news bombs where all of a sudden so and so has said not so mild, or all of a sudden so and so said it's just like aches and pains. Don't worry about it. But there is that risk we've got to keep in the back of our mind about the world going forward, because this is the new world that we live in, where people are very much go from a case of shrugging off and sort of like not ignoring everything that's going on. But then if you bring in a few words, a few sort of keywords which relate to deaths, pain, petulance, famine, whatever, we all sort of like start to take things a little bit more seriously, or panic a little bit. I don't know.
Mm.
Yeah. Okay. Thanks for that.
Yeah. Okay. So data today: German CPI at 1 p.m. Latest read on inflation from Europe. The number is expected to rise to 4.7% year on year. So again, pretty punchy number. Not quite what we're seeing in the US, but still, something to be concerned about, I think, for the central banks. 3 p.m. We've got the US pending home sales number. Sales expected to rise 1.3% month on month. We've got Fed Chair Powell making an appearance tonight, so markets will be keeping a close eye out for any clues on how the latest developments could shape monetary policy. So a few bits to keep us interested in, obviously, with what's going on with the new variant as well. And it's Cyber Monday today, is it? Any excuse
Yeah.
to try and sell something for the same
Yeah.
price but make it look like it's cheaper?
Yeah, I think that Cyber Monday sort of like been morphed into Black Friday tech or whatever. So yeah, there might be a few little deals going on out there, but I wouldn't be too hopeful. I think
Okay.
they normally sort of like, yeah, so it was like Black Friday's coming up. Let's do the Black Friday 2 weeks early, so it's no longer Black Friday because deals are already there.
Yeah,
So,
definitely.
but no, I mean, sort of like obviously sales. Black Friday is the reason it's called Black Friday is this is the first week in the calendar year that the retail businesses show a profit.
Mm.
So, yeah, not much margin there, I suppose. I
No.
suppose that
So if you've
says,
got to wait 9 months to get paid, 11 months to
yeah,
get paid,
yeah,
12 months to get paid.
that's it. It's like an 8%. Well, I suppose if you take it as like November's the 11th month and you got December is your profit month. So,
Yeah.
yeah. not fine margins.
Indeed. Okay, that'll do, Steve. Long one today. Hopefully it was interesting for people that were watching. We'll be back tomorrow with more of the same. Until then, have a good day, everyone.